Hello, everyone. This is Rob Golfi with REMAX, the Golfi Team. Welcome to the Golfi Real Estate Show, Niagara Edition, with host Tim Dennis. And we have a special guest with us, Brian Hogman from Mission 35 Mortgages. Hey, Brian, how's it going?
It's going awesome. And you know what? There's a little bit of talk about the mortgage market this week, so I'm glad to be here.
You think?
Just a bit.
A lot of that in the news this last week. Before we get to that, and Brian, let's talk about the market. What's been happening with you over the past week, Rob, in terms of, because you sent me some numbers. Take me through these.
Yeah, so I'm going to start off with St. Catharines. Now, I've always said this. My prediction was, like earlier this year, that the market's going to go up and down, like, 10,000, 20,000, up and down throughout the year. And it shows that. So right now in St. Catharines, the average sale price in St. Catharines is $697,000. Now, I think it's a little high, but wait till the numbers at the end of next week, we'll get the final numbers. But we were down as 590,000 at one time in January of this year. And then it's been fluctuating, from 620, 640, 636. But we only had 89 sales so far as of Thursday of this week. So, and usually sales are usually about 150, 170, which is, our sales numbers are down for no matter right across the board everywhere in the Golden Horseshoe. Mm-hmm. So there was only 89 sales as of the 26th of this month. Now, I get it. And there's some times where people have seen they bought a house maybe in July, and they felt like, and now they're closing on their deal right now, and they're feeling like they maybe overpaid. Mm-hmm. Don't feel that. That's just the way the market works. But as long as you bought a house for yourself personally to move in, and you're going to have your family, or you just, whatever, you're going to be fine. No problem, because in a year from now or longer, you will benefit, and you're going to start seeing the appreciation, and you're going to go, I'm so glad that I bought this house, and everything's going to be fantastic. Like right now in St. Kitts, $697,000 is the average sale price. Now in Niagara Falls, right now, there's only been 75 sales for this month so far as of the 26th of October. The average sale price right now is $656,000, and we were as high as $682,000 at the height. It just bounces. Like if I went through from January to now, I'm just going to go through a bunch of numbers. So in January, the average sale price in Niagara Falls was $611. Then in February, $641. In March, $679. April, $657,000. See how it drops? Yeah. Again, May, $674,000. June, $678,000. July, $682,000. And then it drops again in August, $617,000. In September, that was a big hit. Only 66 sales, 592,000. So it took a drop. Now it's picked back up again over six. Right now we're sitting at 656,000. Yeah, so like I said, it's going to jump up and down. So one month you're going to feel good. The next month you're going to feel bad. So don't worry about that, people. You will benefit in 6 months to a year from now. You're going to go on, hey, and you're going to be bragging about how much you paid for your house, and everybody's going to be envying you on that. And
I think to remember, too, your house is not a stock portfolio, right? Like people look at their house like they're day trading sometimes. Like it's up, it's down, it's up, it's down. But like you said, you buy it for the long term.
Yeah. So Welland right now. Go ahead, Tim.
Well, I was just going to say that the numbers, you look at the numbers of houses that are being sold, and it's down. Are people kind of staying away from buying right now because the market is in such a flux? What are the reasons that more people aren't putting their houses up for sale right now?
It is their uncertainty.
Exactly.
They're just not sure how the Bank of Canada is going to go. Even though they didn't do an interest rate hike, we're going to talk about that in a bit. But I just think it's just uncertainty. People aren't used to paying this interest rate. Once we're used to paying this interest rate and this is the norm, it's not going to be an issue.
Yeah, and I think, too, we've seen inflation, right? So, it's more at the grocery store. It's more for a car. It's more for gas. It's more for insurance. Like, everything's more money. So when you're getting that death by 1,000 punches, the last thing you want to do sometimes is make a major commitment for a financial purchase. So I think that would also contribute to a lot of the uncertainty and slowdown right now too.
Oh yeah, the biggest concern are the people that actually got a mortgage. Brian, what would you say? 2-3 years ago, 4 years ago, now coming up 5 years ago.
Pretty much anybody coming up for renewal right now is having some sticker shock. Right?
Yeah, because the difference, we're talking 4.5%, even 5% in some cases on their mortgage.
I saw a stat the other day that this interest rate increase is actually bigger than what we saw in the 90s. Even though the 90s had higher interest rates, we actually saw a bigger increase in a shorter period of time.
See that?
So it's hurtful for some people.
Yeah, I get it. So I'm going to go to Welland right now. So Welland is the average sale price as of October right now is $550,700. So and at the highest we were at I think $642,000. So it's been dropping. Welland is going back to where it was before COVID, its normal pace, where it's a little bit tougher. It's you know what it is. You know when you're picking a hockey team, or you're in the schoolyard. You have all the guys lined up. You got the two captains, and you pick the players. Well, guess the last player that gets picked, which probably doesn't happen anymore because everybody wins.
Everybody's a winner now.
Everybody's a winner.
Everybody's a winner now.
So everybody's a winner. So anyway, those are the last guys. That's where Welland would be at.
Oh God.
Gosh. People would pick St. Catharines, Niagara Falls first, and then they'll go to Welland. But Welland, there's going to be some great opportunities there because of the price point. So Welland is good. And I brought in Fort Erie on this one just to see what's happening in Fort Erie. And actually, Fort Erie is beating Welland in average sale price. But the thing is, Fort Erie's only had 30 sales this month so far. So sales are really falling by the wayside in Fort Erie. So at the height of Fort Erie in July, we were at 697,000, which was, wow. And also May was at 696,000, and then the lowest, I think we were at 543,000 in January. So Fort Erie is picking up it's got some good meat on the bone there, like they're hanging on, but the sales aren't there. So if you're a realtor, only work in Fort Erie, and you'll be starving, better get a part-time job. So anyway,
I have the mayor of Welland on line 3 for you.
Oh dear.
Don't say that. Don't say that. But like I said, I don't want people to feel if they overpaid it. Like I said, you're going to be bragging at the end of next year how much you paid for your house, because just because of the fact there is a shortage of homes in this country, and there's going to be a shortage of homes for a long time. So here's the opportunity right now. If you don't buy in the next 60 to 90 days, you are going to end up paying. You're going to get stuck in that time warp where it's going to start climbing, and we're going to have a jump in February, March next year. Then it's going to settle. It's going to bounce back and forth. But towards the end of next year, I think interest rates are going to start maybe going down.
I think it's going to be sooner. Personally, yeah, I think it's actually.
And then once you see a quarter point go down, you're going to see everybody jumping in. Maybe they might maybe not jump in because they're going to think they're going to wait for another quarter point to come down. And who knows? But you're going to see.
I think there's been so many people waiting on the sidelines that there may even be a little bit of spur of activity just from a pause.
Yeah. Oh, well, think about this.
Let's talk about that for a second, guys, because that was the big story this week, which was the Bank of Canada said, we're not going to raise it. We're not going to lower it, but we're not going to raise it. And Brian, you're a mortgage specialist.
He's a mortgage geek.
Yes, I am. A mortgage nerd, official
title. That's
title.
A completely different job.
Yes.
What does that mean to you, and what does it mean to the general public that the Bank of Canada said we're holding steady?
I think the Bank of Canada has finally achieved its goal. Right? The Bank of Canada wanted to make sure that we were slowing down inflation. And a fun fact with inflation, when we saw the last number come out at 3.8%, the real inflation, if you were to back out the increase of interest costs, right? Because they're rising interest, and inflation does account for interest rate costs as well too. We are actually at a rate of inflation at 2%, which is exactly what the Bank of Canada wanted. So it's kind of a little bit of crazy talk, if I'm being honest here, because what ends up happening is they're trying to reduce inflation while at the same time increasing one of the components that they calculate it with. So with all that being said, the Bank of Canada is not going to come out forcefully and say, hurrah, put the fireworks on and say, we're good, we're not raising rates anymore, because they don't want to create a stampede on spending and reignite the inflation. So they have to be very cautious with their narrative to end up saying like, hey, we may raise this again, we may do this again. But by all accounts that I see with the economists and things that I'm reading right now, they're done. Because you got 100,000 mortgages that come up for renewal almost every single month.
Wow.
100,000. So that's 100,000 households that are going to be paying $3,000, $4,000, $5,000, $6,000 extra a month, right? When you raise interest like this, there is a lagging effect. So the Bank of Canada knows we did our job. I think if you even ask ChatGPT or AI what they would do, they probably would have told you they'd stop raising rates 50 basis points ago.
Oh, yeah. See that?
Gotta
listen to the computer.
Yeah, but you know what? The Bank of Canada, they're people. They lay awake at night, and they would way rather have a recession, unfortunately, than continued inflation. So if forced with two things, they would rather have the recession, and I think they will have achieved that, if not already. So what does that mean for everybody out there? I think it means, hey, you can have comfort in knowing that you're at the peak. You know, if there is another quarter point, I'd be surprised, very, very surprised. But I think you're going to see, and then I think you're also going to see the rates drop by I'm going to say almost by the end of Q1 next year, if not Q2 to Q3. Because this kind of stuff with 100,000, you're looking at over 10 months, another million mortgage holders that have a ton of extra debt.
So, and that means less money for people buying any consumer goods. No pizza, no buying pizzas on Friday nights.
Yeah.
No going to Starbucks.
Yeah. Retail sales are down. The furniture business is going to be down. Car business is going to be down. All that stuff's going to be down, right? And I think wait until Christmas comes around, because I think
we're going to see the numbers then.
And that's where I think, because I think we'll see real numbers third week of January. Statistically, the third week of January is the most depressing day of the year. You know why? Because you broke your New Year's resolution already.
Yeah.
And the Christmas bills are in.
Yeah. Yeah.
So by the time that stuff comes out, I think you're going to see that negative sentiment in the marketplace where the Bank of Canada is going to look and go, wow, we might have to do something sooner than later.
Even little kids are going to be disappointed. They're not going to get that iPhone under the tree. They're just going to get that Monopoly game. They're going to be shaking it.
No, you know what they're going to get? The coupon books. Remember the coupon books?
Oh,
I owe Billy one back massage.
Yeah. But seriously, it's going to be tough. It's tough for everybody out there. Even large businesses out there are feeling it. So I mean, it's not just the small person, but it goes all the way up the ladder to the top guys. Everybody's feeling it in one way or another.
And I think the thing to remember is it's temporary. Everything is temporary, right? And I think, will there be some pain in the marketplace over the next 3 to 6 months? Yes, but it's temporary because like you said, and what we've said before is, you know what, when we were before the interest rate hikes, the Bank of Canada was saying we were going to see 2% interest rates till now. That didn't happen.
Oh.
So, and when you go 6 months ago and say we're going to see interest rates higher for longer, well, I don't know if that's going to happen either. Right.
Okay,
so everything
Brian,
is temporary.
Real quick question, Brian, before we have to go to the break. Mm-hmm. Your mortgage is due right now. Yes. And you have a choice. Do you go variable? Do you go fixed at this point? You have no choice. You've got to get it renewed. So what do you do?
Let me see. I'm gonna shake up my little 8-ball here, though the crystal ball here that says
it's tough.
I number one starts with your goals, right? I think that if you are well within your budget, right, and you've bought within your means, a variable is not a terrible option right now because you can afford to take that risk and the downward plunge, right? However, though, a 1-year term, still very, very popular term. 2-year term, still very popular. But lastly, again, if you want that security, I will say something. It's very important for everybody to remember out there that it's not the fixed rates that are going to be plunging down 2 points. It's the variable rates. So what that means is if you got a really good variable rate or a very good fixed rate, because fixed rates are based on the bond market and the Bank of Canada affects the variable. If you've got a 5-year fixed rate that's going to be down in the high 5s, mid 5s, maybe even low 5s over the next 3 to 6 months, that's not going to be a bad rate.
I would lock in at that number. If you can lock in somewhere in the with a 5 in front of it, I would lock in.
Well, 4 months ago, not even 4 or 5 months ago, people were able to lock in the 4s, like 4.8 for a 5-year term. That's going to prove to be a phenomenal rate now.
Yeah, I wish I did.
We'll talk.
People are looking for deals all over the place, and one of those places that people are finding, they think, deals and stress-free ways to sell houses are They get home, they open up the mailbox, and there's a cash for houses ad, or they see it on a fence post somewhere, and they think, great, I can get cash for my house right now, no hassles. Rob, I have a feeling you don't think this is a great idea.
I think it's a terrible idea. These things have been coming out for a few years on in the mailbox. You see them on posts driving around town. And this lady, she got caught up into this cash, instant cash. And what they promised her was, hey, you're going to get cash for your house. And basically, she didn't get cash. She got $7,500 deposit. And basically, she had to. So basically, this is wholesaling. So they tied her up in a contract. And what she did was they tied her up in a contract. They got the price. And then what they did is they got an agent.
Someone else to buy it? Or?
No, an agent to put it on MLS. And they people had to go through the house. That's what she didn't want. That's why she called these people. But not only that, she got probably, I think, about 60 to 80,000 less than what she could have gotten if she did go on MLS. So, like, overall, cash for your house was baloney.
Yeah,
it's crap.
Yeah.
And she should have just called a realtor, called a realtor like us. We would say, hey, listen, if you want your house sold fast, we can have it sold within a week.
Yeah.
And for top dollar, list it at the right price and have you go and do exactly what these guys did. But they made the lift on the house and she didn't. So now she's out probably 60 to 80 grand.
Yeah.
And it's sad. So,
and she didn't get what she was looking for. She didn't try. She still put her house on the market.
Yeah.
She still had to go through the pain. She still had to go through all that.
She still had to have people go through her house, which she said she probably didn't want. She wanted money quick because she was getting in debt and she wanted a quick resolution. It wasn't a quick resolution. The only quick resolution she had was the $7,500 deposit, and that didn't do much for her. So...
And also, too, when it comes down to those cash for money, they don't have any sort of fiduciary responsibilities, any contractual relations. They don't have anything that they necessarily need to do like a realtor does. They don't have the education. And I think, unfortunately, in those situations, a lot of them, well, the ones that I've seen, they're preying on your emotions and they're preying on your situation. So always, in my opinion, always better to call a realtor.
Don't believe any of these quick get rich, quick schemes that, you know.
Exactly. And there's that gut visceral reaction. Oh, I can get cash right now.
Right.
No hassles. I can do that and I can be done with it. Even if I make a little bit less, but there's a whole lot worse outcome than that in a lot of ways.
Yeah. And it's sad. And this is very close to home, like this situation. So she went to the papers to make sure that nobody else gets conned into this situation. This is a house in Smithville that this happened to, a lady in Smithville. And we've all gotten those letters in the mail saying, hey, cash for your house. And I'll tell you, I've been to a couple of these houses when the market turned where people have called me and said, you know, I sold my house and I'm not sure if I did the right thing. And then I've also been on the other side where the guy that did buy the house for cash is trying to sell it now. And I'm like, what? And I mean, he just wanted an opinion and everything. I didn't get the listing,
right.
but he was trying to see what kind of lift he can get on it. And it was just, you know what? I don't know. Like, you can sell your house fast. You don't need a guy cash for that. You can put your house up for sale and get top dollar, no matter what it is. If you list your house at the right price, you will sell fast and for top dollar, and you probably can close in 30 days.
And you could probably have all the showings, like I know with you and your team, you could probably consolidate, get all the, so it's not even, you're not out that much inconvenience.
No.
Get all the showings done in a weekend. Get all the showings done at a certain time frame.
Absolutely,
right?
Yeah. We just did one where we put it on the market on Thursday. We held offers on Tuesday, and it sold. So from Thursday to Tuesday, that was it. Done. 4 days.
That's a hotel stay.
That's it. Exactly. Exactly. So people, please don't fall for those traps. Get an opinion, but get an opinion of a reputable realtor that is in the market, knows the market. Like, give us a call, and we can guide you each way. I mean, I do want your business. There's no doubt about it. I do want your business, but I'm going to be fair with you and let you know what's going on. So be very careful on what you might be offered on your house.
Let's talk about a story, an issue that comes up a lot lately because of some of the other things we've been talking about, is the fact that some people are seeing their houses come due, their interest rates have gone up beyond their means for whatever reason, they can't afford due to the rate hikes. And then they go and look for some place to rent because they have to sell their homes and they can't find anything affordable. That's a situation that's playing out a lot across Canada right now, Robert.
Oh, it is tough. It's hard to, like, people with the stress test now, they have to qualify for 8.3. Is it 8.3% right now?
Yeah, it's 2 points above the target rate, right? So whatever interest rate you're getting, it's 2 points above it. So it could be as low as, oh gosh, I think the lowest one I've seen is 7.99, but it could be up to 10% in some cases that you're qualifying on.
So on a $100,000 mortgage, which nobody probably has, at 8%, what's that?
8,000
a year.
Yeah,
just
like
that's just 8,000 on your
just
mortgage.
The mortgage part.
So times that by 5
to,
if you have a $500,000 mortgage.
Well, in addition to all the other debts, it's the total debt service requirement. So two things on this too, I would say. Like number one, there is a weird silver lining here, which is OFSI. That's one of the regulators. They actually came out with an announcement last week, and we've talked about this in the past. At the beginning of the year, they were tinkering with mortgage rules, sort of, should we do this or should we do that? And they actually decided to leave them alone. There was a huge sigh of relief in the mortgage industry last week because they were talking about taking away exceptions. An exception is where, Rob declares $100,000 a year, but he makes more than 100. And he goes to a bank and he's got good credit and he's got a down payment. There is a debt service requirement that says not more than 40% of the income can go out the door for expenses. However, the banks, when they have 20% down, can make an exception. Say, oh, Rob's got good credit. He's a good guy. We'll make an exception. The regulator was talking about eliminating that exception, which would force people into higher interest rate loans, BDOs and privates. So they actually, it's the first time in a long time I've seen the pendulum swing back and say,
they did that because a lot of barbers, they have cash business, all these little small cash businesses.
There's a ton.
There's a lot of them, and they understand those people have cash. They do get cash business, and they look at that as an option. So they're going back to the way it was.
Well,
before.
I think they're not. So here's the thing: the pendulum swung all the way to the really conservative side. I think we hit it. That's my thought. And now we might, I'm not saying they're going to loosen up mortgage rules anytime soon because it's probably too soon for that. But at least we didn't see them go tighter again, which is a good thing.
So the other thing is, okay, so no, we got people here that need to sell their house because they can't afford the mortgage. Are we finding a lot of that? Here's a guy that can't afford, 76 years old. He was paying $1,000 a month, and now his mortgage is up, I think, another $2,000 on top of that. Now he's on pension and stuff like that. He doesn't have, a good income from anything else, so he's being forced to sell. But the problem here is now he's selling. He to rent.
Well, the number,
you're not going to find anything cheap to rent out there.
No. Well, the number, it's funny because the 76-year-old, the number one product still that we see going through right now is reverse mortgages. For those 75, basically 55 plus, if you're 60, 65, 70, to get over the hump of reverse mortgages where you don't make any payments anymore, it just balloons. But you have to have a lot of equity. You have to have 50% equity in the property in order to get a mortgage.
How long does that reverse mortgage, what's the length of that?
Till death do us part.
So okay, no, seriously. Yeah. What if you live another 30 years? That's the deal.
Yeah.
Do they lose? The mortgage company lose, or is there a clause?
The mortgage companies never lose, Rob. They never lose. Okay, but but that's why it only works if they have a lot of equity, because they do an equation which is above me, but they basically say we won't lend out more than 50% of the value, right? So if you got $1 million home and you're 60, they might only lend 30% of the value. But if you got $1 million home and you're 80, they might go to 50%. So they'd only give you $500,000. So essentially they're basically saying, if you live another 20, 30 years and you're still in the house, we're pretty sure that if that mortgage is not going to exceed the property value. They won't lend you,
right,
90% of the value or 80.
No.
But we're seeing a lot of seniors and a lot of people that want to stay in their home for maybe another year or two, or maybe they want to have a little bit money to live off of. Are doing that to stay in their house because they can't. You're right. They can't go rent anywhere for any cheaper.
Yeah, it's tough. So here's there was a couple, and a lot of divorces are happening, and sometimes they can't each afford to buy a house because they needed each other's income.
That's a lot. Yeah.
So you see either one or the other having to go to rent. And we're seeing that as we're selling the couple's house that's divorcing, and either the woman or the man, either one of them is going to rent, and the other one maybe had the income and was able to afford to keep the house or buy another house, and they're finding it even tough. Like they're moving into like these small basement apartments. Like a tenth of the size, even less than a tenth of the size of the house that they're coming from. That's how tough it is out there for people that are looking for a rental place, because the rent is so high that like, you know, they go, I can only afford $1,500, and $1,500 gets you a room that has a bed, a kitchen, and a living room all in the same room, and then you just got a separate bathroom. That's it. It's like a bachelor, and that's for, you know, it's getting expensive.
I'm waiting for the news story to come out where the divorced couple duplexes their home.
Yeah,
and then one lives upstairs and one lives downstairs.
I'm sure that's happened. I'm sure that's happening for sure.
That'll be a TV series. Actually.
That'd be a good idea, Tim. I think we should put that on call HGTV, and or was it?
I like it.
Duplex divorce.
Yeah.
Okay,
Hey, we just got a name there. There you go.
All right.
Sounds
Starring
good.
Brian Hogden.
Oh no, please, nope. Go to commercial.
Yeah.
All right.
That's it.
Brian Hogman from Mission 35 Mortgages. By the way, where's your location, Brian? Just so people know, so they can come and talk.
Is it Welland Avenue? You have a location?
Oh yeah, we do actually. We're 62 Welland Avenue, downtown St. Catharines there, and then we also have
You're all over the place. Hamilton, Welland.
Yeah, we've actually got about 15 locations all the way from Oakville to Fort Erie. But we're in the REMAX offices in Fort Erie and Welland as well. Too.
Oh, you got one in Welland too?
Yeah, and we're in St. Catharines and Martindale, and then we have one.
Oh, that's
downtown,
what I meant. I wasn't sure where. Exactly.
That's all right. Yeah, and then our head office is in Hamilton, 59 John Street South.
So you've got a house, and you're talking to Rob, or you're talking to one of Rob's people about selling, and the question comes up, do I spend a little bit of money fixing this thing up so it looks good instantaneously, or do I put it on the market as a fixer-upper and adjust the price accordingly? Rob, what do you tell them?
So it depends how far you want to go. So and this is the factor for a lot of estate sales right now. So the kids are inheriting the property, and they're selling it. And a lot of times the parents, they didn't do anything for the last 30, 40 years to the house. So it still has the paneling from the 70s. So do you go in and put a new kitchen, new bathrooms, new flooring, new windows? I would say, depending on what you want to do, I wouldn't probably advise. It just depends on what you're looking for. And the one thing I find with estate sales is that their expectation on the number is so high. And so if you tell them to go ahead and do it, and they get the same number that they actually think it's worth, which is not, they'll be disappointed. Like, I'll give you a perfect example. I went on one in a estate sale, and the neighbor's house is for sale. It was a flip. They got it up for sale for $875,000. So they're thinking, now this is for sale. It's been for sale for 90 days now. And they think their house has got to be worth $750,000, right? And just because of the neighbor's house that's for sale.
Right.
They're not going based on true sales numbers. They're going based on fictional numbers that are active, not sold. So I go in and I say, hey, guys, listen, you can't look at that. That is overpriced. That house should be probably $750,000, $775,000 the most. Completely renovated. And these people thought their house was $750,000. So, and I'm saying you're somewhere, like somebody that's going to buy this place is going to have to put at least 100, maybe more into it, maybe 150 the most. It just depends how elaborate of a kitchen you want to go. Depends on how much you want to go with the bathrooms. I'm sure they're going to take the paneling off downstairs. It just depends on what you want. But let's say it's a minimal of 100, 150,000. Some people might end up putting more. The shingles are good. The windows seem to be pretty good. They're vinyl windows. They're older, but they're still in good shape. Now, that house there, with comparables, shows that it's selling between $650,000 to $675,000. So I'm saying to them between $500,000 and $550,000. They looked at me. They couldn't wait for me to leave.
I bet.
They just said, "Hey, do you want coffee?" I walked in, "Do you want coffee?" And if I said yes, they would have said, "Sorry, the coffee maker's not working anymore."
Yeah, it broke. It broke.
But that's what we're going by. So now, if they renovate and they put 150,000, first they got to find out what the baseline price is. So it's between 5 and 550, right? That's the baseline price. Now, if they put 100 to 150 in there, so they're at 650 to 7, they're just going to break even. So there's no sense of doing it. Now, kitchens do bring more money. Bathrooms bring more money. But you don't put a new kitchen in a house that everything else is dated.
Right.
You don't do that. You don't do a new bathroom in a house that's dated. So I'll give you another perfect example. A friend of mine owned a house in Guelph. He asked me to list. I said, no, just use a local agent, this and that. So she didn't do a job. She actually convinced them in the beginning of 2022, to renovate the bathrooms. And I didn't know they were. Oh, wow. She advised them. So they renovate the bathrooms, so they missed that mark, right? And then after, she didn't sell it, so he calls me. Goes, Rob, I want you to sell my house. So I go, okay, no problem. So we listed at the same price that she had it. I sold it within a week. Nobody from nobody, the person that bought it hasn't been through it. They came in. I said to him, I wish I knew that you were told to put a new bathroom in, because that was a waste of money. He spent $50,000 on 2 bathrooms.
Oh, wow.
And he will not get that money back. He still would have sold the house, probably for more money, because it was earlier in the spring, and he would have saved $50,000 by putting the bathrooms in. So you got to be careful. Get to know the agent. Find out. People call me, what do I need to do? Nope, don't do this. And I'll tell you by the month of the year, what you need to do, what you don't need to do. And that's the experience that we have. You don't do something that's going to put money into it. You put money into it and you get $0 out of it. And I get asked that all the time. Sometimes people say, should we do this? I go, no. Should we put hardwood floors in this house? No, because you're going to get the same dollar for your house if you did. Right. So you got to be very, very careful on what you update in a house if you're going to put it up for sale. Now, a guy comes in, he wants to flip it and take the chance and do that. Right now, it's tough to find houses to flip, because houses are still a little expensive. But you got to be very careful.
Do people like the fully finished house, though, you think? Like, do they like the unicorn, the one that's like, oh,
absolutely.
my God, wow. So it's kind of like, if you're going to do it, do the whole the full Monty, the whole 9 yards.
Absolutely. We had a house. Yeah. We listed it at $1,250,000. And my son Dan listed it, and everything done to the nines. We didn't hold offers. We put this thing on the market. First 3 agents bring their clients through. Boom. Offer, offer, offer. So we said, oh my, okay, wow. See, that's the unicorn. That's what people want. People don't want it. People are willing to pay for it. Sold for $100,000 more for that house. So people want something to move
all
into.
Done.
Nothing done. Now,
see.
guys like you and me aren't afraid of that.
Yeah.
You know what I mean? Like, we'll go in, hey, needs updating? No problem, because we got the connections, we got the access, we've got that, because we've gone through that. But a lot of people don't, and they don't want the headaches. They don't want the hassles of renovating. Yeah. You know what I mean? But some houses that maybe are it's half updated, the other half isn't. They sell, and the buyer will say, you know what, we'll update the kitchen down the road. Maybe we'll just paint the cabinets white and put a new countertop temporarily.
Is it worthwhile to say, just on that vein too? Do you think like, if you have a property and do you bring it up to, if it's dilapidated, and bring it up to standard, or do you just list it kind of like disheveled? So, do you know what I mean? Like, if you were to go different levels.
Yeah, you go as minimal as possible. The best return on investment you are going to get is a paint job. And you can get, and I would hire the cheapest painters out there. Just make sure they stay in between
Everything's
the lines.
white. Everything's white. Floor, ceiling, walls. That's all white.
You get you get a dated house. You get a dated house. Take the old wallpaper off. Just take that off, paint it. You will do a little better on the price, because it'll be fresh and clean, and people will look at it and say, hey, you know what, we can work with this.
Right.
But if you got you know what, that house with the paneling downstairs, I get it painted white.
Right.
People may replace it, but people can feel how open and comfortable and bright it is with the instead of having that old 1970s paneling. Right. Like I'm telling you, paint jobs, best return on investment. That's it. But were you just going to write that down?
I am, yeah, paint job. Yeah, I got
it. Neutral paint job.
Neutral paint job.
Yeah.
Don't go with the colors like blue and green and red. Get rid of those colors. Let the buyer put those colors in for themselves after they move in. but just go with just paint job is the cheapest way, you know, unless you want to go all the way, but you may not get.
But there's a big difference between going all the way and doing a paint job. Like you're talking could be 20, 30, hundreds of thousands of dollars,
I'm
right?
telling you, it's not cheap.
And you're not going to get the return, right? Unless you go all the way. It's by the sound
that's
of it. You know?
Yeah, if you go all the way. It just depends. But exactly. We have some people that, like I said, inherit houses and they think they're going to get more money, but they just turned over dollars and they went through a 6-month headache. Right. You know what I mean? So
we got a question that came into us this week to ask you while we were on the air, Rob. So it was very simple. Is my real estate agent allowed to charge me for marketing costs?
They can charge you for marketing costs. It just depends on the realtor. Some realtors try for it, and I get it. It just depends on the realtors. We only charge a marketing cost of $250 only for rentals. Just because the cost to put a rental up on MLS is the same as a regular listing that we're putting on MLS, that the house is for sale for $700,000, $800,000. So we just it's just a minimal cost. We literally
like a lease, not a rental property, a lease.
It's a lease, yeah.
Right,
so like if you have a house for rent and you call us and say, hey, I want to get $2,500 a month rent. Okay, no problem. So we'll put down and usually it's 1 month's rent is the commission on that. So it's $2,500, and we add the $250 for that, just because our cost, we don't make money on that. We do it as a lot for our clients as a favor, and we've got the best search engine optimization for rental properties on the system. So a lot of people use us. Whatever it is, we had to shut it off one time. Literally, we had to shut off our rental SEO just because we were getting an abundance of it. We had to slow it down. So sometimes we turn it on, shut it, put it on, shut it off. But that's the only thing we charge is $250 for a lease. But on regular listings, we do not charge a marketing fee. Just because I think there's enough there from the commission fees that we don't need to do that.
I want to finish up on the show this week by talking about something that might seem kind of common sense, but I wonder how many people think about it. You're inviting people into your home to decide whether or not they like it and they want to buy it, and they walk through the front door. How long does it take the average person to judge whether they like what they see or don't? Rob, is there?
Yeah, within half a minute. Half a minute. And that's not only just going into a house, seeing if you like the house that you're buying, but just going even to a friend or relative.
Just house. Meeting somebody, I think, takes half a minute. Like, ooh, I don't know about this guy.
Yeah, right? Yeah. But you know what I say? You know what? The first thing people do is as soon as they walk in, obviously the smell of the house, if there is a smell, right? Like maybe do they have 5 large dogs in there, and it's just, I mean, we had a lady one time, and she was a principal. And you're not going to believe this. She let her dogs go to the washroom in the basement. Basement wasn't finished. The basement was not finished. But the smell in this house, unbelievable. And you know what do I do? What do I tell this lady? I go, excuse me, but listen, is there any way you can let the dogs just go outside to the washroom? And she goes, nope. And that's just the way they go. Like, she's trained them to go in the basement. And I'm like, well, I go, your house smells. And I still got the listing. I still got the listing. And
honest, got to be honest on that. Yeah.
But you know what? She didn't care. And she could have got better. She would have got better money on her house. But I mean, it was messy. She's just that type of person. And if you met this lady, you would not think that her house was in disarray in that.
That's why they always say that the open houses, you bake some chocolate chip cookies or something, right?
That's
you put the cookies in the oven, the scented candles, you do all that stuff. Did that work for that house, scented candles?
No, it didn't work. And we try to even put plug-ins, those plug-in fresheners. It's still
you needed a whole bunch of them.
But here's the thing: a lot of people check, and this is what I check when I go through houses. Well, the smell is the first thing that hits you, and the temperature. Yeah, you can, like if it's too hot, too cold.
Right.
Sometimes, we have people. If it's the house is not occupied, I say, hey, listen, I know you're trying to save money on money on gas, like the heating, but you got to put it at least to a decent temperature because it's colder in a house than it is outside. So
well, and you know what? That speaks volumes for like apartment building I have. The heat is on too high sometimes, and I know when it's being showed if it's too high when it's not supposed to be. You're like, oh, this is going to be uncomfortable.
Yeah, and you know what? People look at dust. People look at I'll look at what do you call it? Light fixtures, how dusty they are,
like the dust bunnies or the cobwebs.
Yeah, I was just looking at a restaurant yesterday, and I saw these there were 6 light fixtures in a row, and I felt like saying, you know what? You guys should get the Windex and clean those light fixtures. So I look at those things. Dirty windows. You know what? We try to, clean the windows here in our office as often as we can. The color of the walls. We just had a paint job. We had the old colors from the taupe. Is it taupe colors? What's the cream color?
Creamy.
Yep.
Cream. So, I mean, you do look at it. Not only you look at it as looking at houses to buy, but your relatives and your friends look at your house as they walking in visiting you.
Yeah.
These
are all simple things too that are not expensive either when you think about, except for maybe the dog situation that might be a little bit more costly. But, when you look at the smell, when you look at it, and it kind of speaks to really, I think if I was walking in and I saw some of those things not how I wanted them to be, you start to think there's something else wrong with the house.
Yeah.
Right. They're not taking care of it.
So
it's got to be tough though, Rob. I mean, to address the situation with the lady and the dog, to address that and say your house smells, that I'm surprised you got the listing to tell you.
Well, actually, if I do recall, I did have her sign it first, then I told her. Please sign here. Please sign here.
Yeah. By the way.
Now that I have you under contract, your house smells.
All right. Let's get some contact information out for people who might be listening for the very first time. Ryan, how can people get a hold of you to ask questions?
You know what? You can actually Google us at Mission 35 Mortgages and go to our website, mission35mortgages.com, and send us an email, and we are happy to serve any way possible.
Robert, what about Golfi?
Yeah, give us a call or look us up at robgolfi.com. Last name spelled Golfi, or you can call us at 905-641-0308.
Or you can listen to the next edition of the Golfi Real Estate Show next week, same time, same place. Thanks, guys. We'll talk soon.
Thanks, Tim.
Thank you.